Investing like Charlie Munger starts with adopting the right mindset. Charlie Munger, the vice chairman of Berkshire Hathaway and Warren Buffett's trusted partner, is renowned for his distinctive approach to investing. His mindset is a key factor in his long-term success, and we can learn valuable lessons from it. Multidisciplinary approach. Charlie Munger is a firm believer in the power of multidisciplinary thinking. He advocates for the continuous expansion of knowledge in various fields beyond finance. Munger's approach involves drawing insights from disciplines like psychology, economics, mathematics, and biology. By having a broad understanding of the world, you can make more informed and holistic investment decisions. Invert. Always invert. One of Munger's famous mental models is the concept of inversion. Instead of focusing solely on how to succeed, he advises us to think about how to avoid failure. By identifying potential pitfalls and mistakes, you can enhance your investment decision-making. This approach encourages a more cautious and thoughtful strategy. Circle of competence. Munger emphasizes staying within your circle of competence. In other words, invest in areas that you understand thoroughly. This reduces the risk of making uninformed decisions. Munger himself adheres to this principle, only investing in businesses and industries he comprehends deeply. It's a strategy that promotes confidence and minimizes risk. Long-term perspective. Charlie Munger is known for his long-term perspective on investing. He advocates holding on to investments for an extended period, allowing the power of compounding to work its magic. This patient approach aligns with his philosophy of avoiding unnecessary trading and taxes. It's a strategy that encourages discipline and patience in the face of market fluctuations. Learning from diverse sources. Munger is an avid reader and a lifelong learner. His commitment to acquiring knowledge from various sources is a key pillar of his mindset. By reading books, academic papers, and staying informed about a wide range of topics, you can develop a more comprehensive perspective. Munger's eclectic reading list is a testament to the value of diverse sources of information. Investing like Charlie Munger goes beyond mindset. It involves a meticulous approach to selecting stocks. In this chapter, we'll explore Munger's methods for identifying promising investments. Quality over quantity. Charlie Munger places a premium on quality over quantity when it comes to stock picking. He prefers investing in a few exceptional companies rather than diversifying across a multitude of average ones. This approach allows him to focus on businesses with strong competitive advantages and long-term growth potential. Moats and competitive advantages. Munger often talks about investing in companies with economic moats. These moats are what protect a business from competitors and allow it to maintain its profitability over time. They can be in the form of strong brand recognition, network effects, economies of scale, or regulatory advantages. Identifying companies with moats is a key aspect of Munger's stock selection strategy. Long-term perspective. Similar to Warren Buffett, Charlie Munger believes in holding on to stocks for the long haul. He sees the benefit of compound growth over time and advises against frequent trading. Munger's investment philosophy encourages patience and avoiding the temptation of short-term gains. Understanding the business. Before investing in a company, Munger insists on thoroughly understanding its business model, industry dynamics, and competitive position. He conducts extensive research and analysis to ensure that he has a comprehensive grasp of what he's investing in. This deep understanding reduces the risk of making uninformed decisions. Investing like Charlie Munger isn't just about selecting the right stocks. It's also about managing risk effectively and maintaining discipline throughout your investment journey. Margin of safety. One of the core principles in Munger's investment philosophy is the concept of a margin of safety. This means buying a stock when it's priced below its intrinsic value. By doing so, you create a cushion that protects you from potential losses. Munger advises investors to be cautious and not overpay for assets, as this can lead to substantial risks. Avoid overconfidence. Charlie Munger is acutely aware of the dangers of overconfidence. He warns against making investment decisions based on ego or a false sense of invincibility. Instead, he advocates for humility and rationality. Continually question your assumptions and be open to changing your mind when new information becomes available. Diversification. While Munger prefers a concentrated portfolio of high-quality stocks, He acknowledges the value of diversification to some extent. Diversifying across different industries and asset classes can help spread risk. However, Munger still emphasizes that deep knowledge within your chosen investments is crucial. Diversify, but don't dilute your expertise. Patient capital and long-term perspective. Munger's approach to investing involves patient capital. He believes in holding onto investments for the long term and allowing them to compound over time. This strategy aligns with his philosophy of avoiding unnecessary trading, which can lead to higher transaction costs and taxes. Patience and a long-term perspective are vital for achieving success in the world of investing. Emotional control. Investing can be an emotional roller coaster. Munger advises investors to keep their emotions in check and make decisions based on logic and reason rather than fear or greed. Emotional control is crucial for maintaining a steady course in turbulent markets. Staying disciplined during market downturns is where many investors falter, but Munger's approach encourages staying the course. Investing isn't just about numbers and analysis. It also involves understanding and managing the psychological factors that can impact your decisions. In this chapter, we'll explore how Charlie Munger addresses the psychological aspects of investing. The psychology of misjudgment. Charlie Munger has identified numerous cognitive biases and psychological tendencies that can lead investors astray. Some of these include over-optimism, confirmation bias, and the fear of missing out. Recognizing these biases is essential for making rational investment decisions. Munger encourages investors to be aware of these potential pitfalls and work to mitigate their effects. Patience and discipline. Munger's emphasis on patience and discipline extends to the psychological aspects of investing. Staying disciplined during market fluctuations and resisting the urge to make impulsive decisions requires mental fortitude. Munger's approach encourages maintaining composure and sticking to your well-thought-out investment plan. Emotional control. Emotions can be a powerful force in investing. Fear and greed can lead to hasty decisions and costly mistakes. Munger advises investors to keep their emotions in check and base their choices on rational analysis. Emotional control is crucial for making sound investment decisions, especially during turbulent times. The importance of mental models. Munger's extensive use of mental models also plays a role in managing the psychological aspects of investing. These models help him think more clearly and make better decisions. By adopting and applying mental models, you can improve your ability to assess situations objectively and reduce the influence of emotional biases. Learning from mistakes. One of the most valuable aspects of Charlie Munger's approach is his willingness to acknowledge and learn from his mistakes. Instead of dwelling on failures, Munger treats them as valuable lessons that contribute to his growth as an investor. This mindset shift allows him to continuously improve and make better decisions in the future. As we conclude our journey into the world of investing like Charlie Munger, let's recap the key takeaways and insights that can help you become a more informed and successful investor. The Munger mindset. Charlie Munger's mindset is the foundation of his success. Embrace lifelong learning, adopt a multidisciplinary approach, practice inversion, stay within your circle of competence, and develop a latticework of mental models to guide your decisions. The art of stock picking. When it comes to selecting stocks, prioritize quality over quantity, seek companies with economic moats, adopt a long-term perspective, and thoroughly understand the businesses you invest in. Risk management, patience, and discipline. Manage risk by maintaining a margin of safety, avoiding overconfidence, and diversifying sensibly. Practice patience, maintain a long-term perspective, and exercise emotional control to stay the course during market fluctuations. The psychological aspects of investing. Be aware of cognitive biases and psychological tendencies that can affect your decisions. Cultivate emotional control, use mental models to think clearly, and view mistakes as opportunities for growth. Learning from mistakes and the power of mental models. Acknowledge your mistakes, learn from them, and build a latticework of mental models to make better decisions. Embrace the concept of inversion to avoid pitfalls, and harness the power of compounding over time. The path to mastery investing is a lifelong journey, and becoming a successful investor like Charlie Munger is a process of continuous improvement. Munger himself acknowledges that he's made mistakes along the way, What sets him apart is his ability to learn from those mistakes and refine his approach over time.